Okay, good morning, everyone. My name is Coach Rod. I would like to appreciate our coaches, Coach Moore and Coach Salisu, for this privilege given to me once more to present to you the technical analysis using the two indicators tactics for beginners. Just in case you are a professional on this call, the reason why we are doing this is for the beginners. We have different levels at which we can analyze the crypto market. Just like when you have a first degree, then you have a master's and you have a PhD. The same thing applies here. So for a newbie who is just coming to the crypto space, you don't take that person to a master's level or a PhD level. That person is going to run or is going to get bored. So we try as much as possible here. We break it down for you to pick interest. Then when you pick interest, you can now decide to learn the higher levels. So for now, today is technical analysis for beginners, and we are making use of indicators to do that. I'll be sharing my screen now. Okay, for you to be able to analyze the crypto market, you need a tool known as TradingView. TradingView. This is how the tool looks like. On this tool, you are going to set up the indicators that you are going to be using to analyze the crypto market. Alongside, you will be uploading the different cryptocurrency coins that Rqtmi trades on the different exchanges. So this is my own trading view, and if you can see that we have different coins that are already uploaded on it. So if you want to learn how to upload coins on your trading view, if you want to learn how to set up your indicators on your trading view, ensure you attend our sections on Monday. That is where they explain basic features of trading view. Also, we have recorded versions that can help you set up your trading view just like the way you are seeing mine. So you can visit our YouTube channel, Rqtmi Motion International, our YouTube channel. Then you can go through our various videos that can help you set up your trading view this way. So I'll proceed. Today, we are talking about technical analysis using the two tactics indicators for beginners. Take note for beginners. So once you come on board, once you activate your Rqtmi board under Rqtmi Motion International, we have our own style of picking coins. So we make it as simple as possible for everyone who is new to the crypto space to understand and pick interest in the business. So if you are just coming for the first time, if you are just coming for the first time and you are new to the crypto space, once you activate your poll, we tell you that we have a strategy that is known as change percent tactics. Change percent tactics, you don't need to learn how to analyze. We call it trading without analysis. You just follow a simple rule that we are going to give to you. Once you follow that simple rule, you get your result. That is number one. You pick a coin, trading without analysis. It is called change percentage tactics. Number two, once you have mastered this change percentage tactics, which is trading without analysis, the next thing you need to do is you learn how to pick, you depend on signals from the signal group. We have a signal channel where we send signals that are already analyzed by professionals. So your work is just to pick those signals. We are going to teach you how to pick the signals from the signal group. So you don't need to stress yourself with analysis. These two things are what you should learn first when you come on board. First is how to use the change pattern tactics. The second is how to depend on signals from the signal group. After you have mastered this, you can now decide to want to learn how to analyze the crypto market using these two tactics indicator I'm going to talk about. So for today, I'm going to talk about the third one, which is trading with analysis using the two tactics indicators. So what are the two tactics indicators? There are different indicators you can use to analyze the crypto market. But we have choose just two indicators in this Rqtmi Motion International. And the two indicators are, the first one is known as the stochastic RSI. Stochastic RSI. So if you are also looking for the spelling, this is what it looks like. If you can see my screen, this is what it looks like. Stochastic RSI. Stochastic RSI. The next indicator we have is the auto Fibonacci retracement. Auto Fibonacci or auto Fib, or you call it auto Fib retracement. These are the two indicators. Don't mind my writing, please. These are the two indicators we make use of: the stochastic RSI and the auto Fibonacci retracement. So what does the stochastic RSI look like? What does it look like? Now, this is your stochastic RSI. Sorry, I'm trying to. Okay. This is what your stochastic RSI looks like. The combination of this red line you are seeing, this yellow line you are seeing, this green line you are seeing, and this blue line you are seeing. The combination of these four lines is what is known as stochastic RSI. So in lane term, I call it red line, yellow line, green line, and the blue line. But in cryptocurrency or in this space, we refer the red line to be the stellar zone. We call it the stellar zone. The red line is known as the stellar zone. The green line is known as the buyer zone. The yellow line is known as 50% sellers and 50% buyers. So it means at this yellow point, there's an indecision between sellers and buyers. The market is at equilibrium at that point. Then your blue line signifies your RSI. And the meaning of RSI is relative strength index. That is the meaning of RSI, relative strength index. So what does your stochastic RSI help you to do? So why is it important? What is the function? So your stochastic RSI helps you to know when to enter a trade at a particular time. So it means that this your stochastic RSI works with time frame. Now, what are the time frame? These are the time frame up here. All these are the time frame up here. So your trading view is going to have all these time frames, which is up here. So we have the 1 minute time frame, 2 minutes time frame, 3 minutes time frame, 15, 30 minutes time frame, and the rest. So your stochastic RSI helps you to know when to enter a trade, a particular trade, like this ENG USDT. Now, when do I enter this trade? On the 1 minute, on the 2 minutes, or the 3 minutes? It helps me to know when to enter. So that is what your stochastic RSI helps you to do. But how do you now make use of it? Now, when you want to make use of your stochastic RSI, you already know that we work with time frames. So I'm trying to keep it as simple as possible. So we have what is called short time frame. We have what is called a short time frame, and we have what is called a long time frame. If you watch our previous videos or classes on this, you will understand. but because of time, I'm keeping this simple. Now, for the subject of today, the time frames we are going to be working with is the 15-minute time frame and the 1-day time frame. So if I'm working with the 15-minute time frame, 15-minute time frame becomes my short time frame. So 15 minutes is my short time frame, while 1 day is my long time frame. Please take note of that. If 15 minutes is my short time frame, 1 day is my long time frame. So what it means is that I want to enter this trade on the 15 minutes. Now, since 15 minutes is my short time frame, there are conditions for short time frame. We have 3 conditions for short time frame. Now, what are the conditions for short time frame? It is that condition that will give me a go ahead. If I see that condition on this 15 minutes, that is my short time frame, is what is going to give me a go ahead to pull my trigger on the 15 minutes time frame. So what are the conditions? Take note of the conditions. First condition is that the RSI should be touching the green line. This is what it means. Now the RSI is approaching the green line. So if I extend it like this, it should be touching the green line. That is the meaning, that this RSI, this blue line, should be touching the green line. But as you can see, it is yet to touch the green line. So number 1 condition is that the RSI should be touching the green line. Number 2 condition is, okay, let me do a back testing that we explain explicit. Okay, let's say I cut it here. Okay, now number 1 condition is that you want to see the RSI on the short time frame. The RSI should be touching the green line. Like in this case, it has touched the green line. That is the first condition you want to see. The second condition is you want to see that your RSI is between 0 and 20. You want to see that your RSI is between 0 and 20. Now, looking at the calibration by your right-hand side, I mean this side, when I mean by your right-hand side. So if I extend this further for clarity purpose, now if I extend this further, looking at this right-hand side, where you have the calibration, the numbers, this side. Now, the second condition is that your RSI should be between 0 and 20. Looking at this number, this is 0 here. Currently, this is 0 and this is 20. So you want to see that your RSI is between 0 and 20. Looking at your RSI now, if I trace it at this point down here, you will find out that your RSI is currently at 6.28, which means it is between 0 and 20, meaning that the second condition is valid. The second condition is valid. So first condition, your RSI should be touching the green line. Second condition, your RSI should be between 0 and 20. So in this case, it is at 6.26. The third condition you want to see on the shorter time frame is that your RSI should be pointing up. Your RSI should be pointing up. So if you look in this case, it has touched the green line, is between 0 and 20, and is about pointing up. It's almost pointing up. So it should be pointing up like this. Let's assume it's pointing up like this. Now, if it is pointing up, there's a conjunction to that statement. This is it, that your RSI should be pointing up and should be between 0 and 25. If it is pointing up, it should be between 0 and 25. Now, where is 25 here? If I push it, look at 25 is somewhere here. This is 25, and this is 0 down. So if it is pointing up, let's assume it is pointing up to this point. So the third condition is valid. It is pointing up, and it's between, if I trace it down here, is between 0 and 25. So that is the 3 conditions you want to see on your shorter time frame. But we are saying that it is not compulsory that you must see the three conditions. At least any one of these conditions, which is any one of these conditions should be met, which is if you are seeing it that the RSI is between 0 and 20, it is perfect for you, because there is no way that your RSI should be between 0 and 20 that it has not touched the buyer zone. So if your RSI is between 0 and 20 for you, you are good to go. It means you can come to the 15 minutes and pull your trigger and enter into the trade on that 15 minutes. But again, take note, you cannot use only one indicator to pick a trade perfectly. You need combination of two or more indicators to pick a trade perfect. That is why you cannot only use your stochastic RSI. So I won't confirm that your stochastic RSI is giving you a go ahead to enter into that trade. What is the next thing to consider is you also consider you need the help of your auto Fibonacci. So how do we use the auto Fibonacci individually? Now, what does auto Fibonacci help you do, and what is auto Fibonacci on this chart? When you see all these numbers, 127.2%, 100%, 78%, 50%, down to, you see, 0%, minus 20. All these numbers are known as the auto Fibonacci number or auto Fib retracement. Now, what does auto Fibonacci helps you to do? It helps you to know on a particular time frame, like just as we are on the 15 minutes time frame, it helps you to know if that market or if that time frame is an uptrend, if the market is an uptrend or a downtrend at that particular time frame. So how do you know if it is an uptrend or a downtrend? Listen carefully, please. For an uptrend, using the auto Fibonacci, for an uptrend, you want to see 100% at the bottom and 0% at the top. This is an uptrend. Anytime you see 100% at the bottom, 0% at the top is an uptrend. To further confirm that this is an uptrend, you will see a diagonal line. Let me help you out with the diagonal line. The diagonal line is projecting from the bottom like this to the top like this. To further confirm is an uptrend. Please take note of that, just in case the number is confusing you. For an uptrend, you want to see 100% at the bottom and 0% at the top. This is an uptrend. To further confirm is an uptrend, you will see a diagonal line projecting from bottom to the top. This is an uptrend. Now, don't be scared of these candles that you are seeing. Don't be scared of all these candles you are seeing. Of all the candles you are seeing, the candle you are interested in is any candle after the diagonal line. Any candle after the diagonal line. So now, look at where this diagonal line terminates up here. You just put a vertical line. This is to make it further easy for you guys to understand. I do not need to put it because I already know what I'm doing. So you don't need to be scared of all these candles. All these candles before the diagonal line. You don't need to be scared of all these candles. So once you look at where this diagonal line terminates at the top here, you put a vertical line. The candles you are interested in is the candles after the diagonal line, which is this candle. And the most of all these candles I said you are interested in, the most valid candle you are most concerned about is the current candle, this green one that is showing, the position of this current candle. So don't be scared by all these candles, please. So now, having said that, this is for an uptrend. Let's look for a downtrend. How do you identify a downtrend? Using auto Fibonacci numbers. Now, for a downtrend, let's see if we can see a downtrend on one of the time frames. Okay, good. Now, for a downtrend on the 3 minutes time frame, for a downtrend, you will see that it is the opposite of an uptrend. For a downtrend, you will see 0 at the bottom. You are going to see 0 at the bottom and 100 at the top. Take note of that. This is a downtrend. A downtrend. Now, to further confirm that this is a downtrend, you will see a diagonal line projecting from the top like this to the bottom like this. In the same vein, don't allow the candles to scare you. All the candles before the diagonal lines are not valid. So where you have the candle terminate, where you have the diagonal line meet a candle downtrend, you terminate it here. So what you are concerned about, what you are mostly concerned about is the candles after the diagonal lines. Which are these candles? Which are these candles? Which are these candles? So of all the candles you are interested in, it is this current candle that is your concern. This very current candle, the position of that very current candle, that is your concern. So that is what an uptrend and a downtrend does for you. However, you still have, just like your stochastic RSI on a shorter time frame, you have conditions. The same thing applies for also auto Fibonacci. For uptrend, there is a condition at which you use the auto Fibonacci to enter the trade for an uptrend. Then for a downtrend, there's also a condition for you to use to enter the trade for a downtrend using the auto Fibonacci numbers. So we are going to talk about the conditions. So going back to the 15 minute, which is an uptrend, for what we said. Now, since it is an uptrend, and we have identified that it is an uptrend, our stochastic RSI is giving us a go ahead because we are seeing it between 0 and 20. But we now came to, since we cannot use stochastic RSI alone, we need the help of auto Fibonacci. So we now came on the 15 minutes. We now first identify if it is an uptrend or a downtrend. So we saw 100% at the bottom and 0% at the top. So we identified that it is an uptrend, but there is a condition for an uptrend. Since it's an uptrend, this current candle must meet a particular condition. Since I said of all the candles we are interested in is the current, that current candle must meet condition for an uptrend. Now, for an uptrend, what is the condition? The condition for an uptrend is that you want to see the current candle on the 50% line. This is the 50% line. Take notes. On the 50% line. You want to see the current candle on this 50% line. Take note of it. Or anywhere below the 50% line. So like in this case, we have the current candle below the 50% line. We are seeing it between the 50% line and 61.8% line, which is a good one for an uptrend. Take note of that, please, for an uptrend. So for an uptrend, the condition for an uptrend using the stochastic RSI and using the auto Fibonacci number is that you want to see the current candle on the 50% line or anywhere below the 50% line. Now, what is the condition for a downtrend using the stochastic using the auto Fibonacci? Now, let's go to 3 minutes chart. Now, for the condition for an uptrend, for a downtrend, using the auto Fibonacci is that you want to see the current candle on the 0% line, this 0% line. Now, right now, the current candle is a little bit above the 0% line, but where you want to see it is on the 0% line or anywhere below the 0% line. So that is how to make use of your auto Fibonacci. So having understood the function of your stochastic RSI, that it helps you to know when to enter a trade at a particular time frame, considering the conditions of on short time frame. Then you know that your auto Fibonacci helps you to know when that particular time frame, your RSI tells you to enter, if that particular time frame is an uptrend or a downtrend. So this is how to use both of these indicators. Now, having known how to use these indicators individually, we now want to learn how to combine these indicators together to pick a trade almost perfectly. So how do we do it? Remember, we said we work with the 15-minute time frame and the 1-day time frame. Now, there's something I forgot to say is, yeah, we have our own style of trading. We don't trade every time. We have our own style of trading. The time we trade 8 a.m. We have 2 entries. We call them the London Combat Zone or London Combat Area is the first entry, entry one. Entry one, take note of that, is known as the London Combat Area because we don't trade every time. Not trading is also trading. That's the rule. So with this entry one period, which is referred as the London Combat Area, is between the hour of 8 a.m. to 11 a.m. Nigerian time. Entry 2 is known as the New York Combat Area or New York Combat Zone, which is entry 2. It's between 1 p.m. to 4 p.m. Nigerian time. These are the 2 entries. These are the time we pick our trade in Rqtmi Motion International. And why do we pick our trade within this period? It is because this is the period in which liquidity is injected into the market and liquidity is taken out of the market. When I say liquidity, billions of dollars are being injected into the market and billions of dollars are taken out of the market. So for you who is a retailer, who you are trading with your small money, you want to see how you can enter with those whales. They call them the smart money concept guys. When you enter alongside with them and you come out alongside with them. That is why we look at these 2 time frames, because that is when liquidity is in the market. So you can come out of the market faster and make your cool cash within this time frame. Take note of that. So we are going to be analyzing within this time frame. So for now, it is obvious that we are in 11:39. So it means that this first entry period is gone already. So we are waiting for this second entry. But because we are having this class now, we cannot go into a live trade, because for we to trade a live trade, we are going to wait till 1 p.m., which is not possible. So there is what you call back testing. So we are going to do back testing on some of these coins, because back testing is simply testing out the previous day's movement of the market, how we took advantage on it and made money from it. So you are going back to previous record to pick your trade. So you can use backtesting to practice, then build your confidence. Then you can come into a live trade and make your cool cash after building confidence. So now that is what we are going to do now. So let's take for instance now, I am on this coin. We want to pick this coin, we want to analyze this coin. Now, we are working with 2 time frames, 15 minutes time frame and the 1-day time frame. The first thing you will do is to go to the 1-day. Take note, please, pay attention to this. You go to the 1-day time frame. On the 1-day time frame, what you want to see on the 1-day time frame. Remember, we are doing backtesting. Let's assume, now, let me stop backtesting this. Now, this is a live trade. This is a live trade. But I want to backtest this trade. Now, currently, as of today, this is where this market is as of today. But I'm doing a back testing to go back to previous trades or previous activities that have occurred on this very coin, ENG-USDT. So it will require me to back test. So I'll click my replay, bar replay. Once I click my bar replay, I am going back. You see, I'm going back, going back, going back. Now, I'll stop somewhere here. Now, why did I stop here? Now, take note, what you call on the 1 day, the first thing you want to see on the 1 day, pay attention to the current candle on the 1 day, please. Pay attention to the current candle on the 1 day. The current candle you want to see must be a bullish candle. Bullish candle. When we mean bullish candle means green. Candle that is pumping. Any candle that is pumping is bullish candle. So when you see green candle, it is bullish. When you see red candle, it is bearish. So there are not much thing to do here. The only thing you want to ensure is that on the 1 day, when you come to the 1 day, that the current candle on the 1 day should be a bullish candle, which is a green candle. Once you have spotted that the current candle is a green candle, the next thing you want to do is to go to your 15 minutes time frame. Now, because I am backtesting, if you are doing a live trade, you are not going to do this. Because I'm backtesting this current candle now, this green candle, I want to just indicate it so that when I go to my 15 minutes, I will be able to identify this current candle on my 15 minutes time frame. Now, this is the current candle on the 1 day, which is a bullish candle. So this is what I'm looking at for the 1 day. Take note, on the 1 day, you are not making use of your stochastic RSI. You are not making use of your auto Fibonacci. The only thing you are interested in on the 1 day is that you want to see the current candle to be a bullish candle. That is what you want to see, a bullish candle. So on the 1 day, and since I've seen it on the 1 day, then I will go to my shorter time frame. Remember, your 1 day is your longer time frame. Then the 15 minutes is your shorter time frame. So I'll come to my shorter time frame. Then this candle that I'm seeing here, this line, it is the current candle on the 1 day. Because once you come to the 15 minutes, each candles on the 15 minutes form every 15 minutes. And the crypto market opens by 1 a.m. every day. So if you look at the current candle on this 1 day, this current candle on this 1 day, when I went to the reason why I marked it, I spotted it, is for me to be able to identify it on the 15 minutes. So when I came to the 15 minutes, I was able to identify that current candle on the 1 day on the 15-minute chart. Now, if you look down, it is telling you that this candle on the 1 day, this is the candle on the 1 day, which opened Tuesday, 11th of March, as at 1 a.m. in the morning. So it means that every 1 a.m. in the morning, a new day for the crypto market. Every 1 a.m. in the morning is a new day for the crypto market. So this was when the new day started from here. Now let's assume you were sleeping when this new day started. You were sleeping, you were not awake. Now look at, because you are on the 15 minutes, every candles on the 15 minutes forms every 15 minutes. So this is 1 a.m. This next candle will be 1:15 a.m. This next candle will be 1:30 a.m. This next candle will be 1:45 a.m. This next candle is 2 a.m. This next candle is 2:15 a.m. This next candle, that is how it forms every 15 minutes. Now let's assume you were sleeping and you happen to wake up as at 7:45. So let's trace 7:45. That's 10 on the 11th. You woke up 7:45 in the morning. This is 7:45 in the morning. So 7:45 in the morning. Okay, so now let's assume as at 7:45 in the morning you woke up. And you know we have two entries. There are only two entries that we have. Entry 1 is known as the London combat area, which is between 8 a.m. to 11 a.m. If you see a setup, you pull a trigger. Then now you woke up 7:45. Immediately you came to map out your entry point, which is 8 a.m. So 8 a.m. Tuesday 8 a.m. Let me use another 8 a.m. Tuesday to 11 a.m. This is our first entry. This is our first entry. Then the next entry will be 1 p.m. 1 p.m. to 4 p.m. So let me use another color. So these are the two entries we consider when taking our trade. And I've explained why we look forward to these two entries is because this is the period where there is high liquidity in the market. Billions of dollars are being injected in the market, and billions of dollars are being taken out of the market. Now, you woke up 7:45 and you have fought your two entries. You are waiting to see a setup. Now, for you to see a setup, it means that your stochastic RSI and your auto Fibonacci must be speaking the same language. What is that the same language? Pay attention. Remember I said on the shorter time frame, which is the 15 minutes, you want to see your RSI touching. Let me see if I can extend. Okay. You want to see your RSI touching the green line, or your RSI be between 0 and 20. Any one of these conditions, 0 and 20. That is what we want to see. Our RSI touching the green line, or it's between 0 and 20. And at the same time, once we see our RSI touching the green line, or it's between 0 and 20, it's telling us you can pull a trigger, but you have to use your auto Fibonacci to also confirm. You cannot use only your RSI to do that. Your RSI is only giving you a go ahead, but your auto Fibonacci has to be speaking the same language with your RSI. So if your RSI is between 0 and 20, you want to see your auto Fibonacci. What is it saying? If your auto Fibonacci is saying that it is an uptrend, meaning 0% at the bottom, 100% at the top, it means that you want to see at that point your current candle, you want to see it on the 50% line or anywhere below the 50% line. If your RSI is touching the green line and it's between 0 and 20, and it's giving you a go ahead to pull a trigger, you have to also confirm from your auto Fibonacci, what is it saying? Is it a downtrend? If it's a downtrend, you want to see 0 at the bottom, 100% at the top. Therefore, you want to see the current candle on the 0% line. So in this case, now our auto Fibonacci and our RSI is yet to speak the same language. So what do I want? I want my RSI to touch this green line, which is signified is between 0 and 20. So let's see. Since I'm back testing, I'll be playing it gradually. So right now, if you look at your auto Fibonacci is saying 100% at the bottom and 0% at the top, which is an uptrend. So we want to see this current candle on this 50% line or anywhere below the 50% line. Then when we are seeing this, we also want to see our RSI touching the green line between 0 and 20. At that point, you can say a setup is formed. They are both speaking the same language. You can then pull a trigger on that condition. So let's see if we can see that condition. So let's see if we can see that condition now. So gradually, I'm pulling it. Watch your RSI, and watch your auto Fibonacci, the current candles. It's still an uptrend. Auto Fibonacci is still uptrend. RSI is trying to come to the green line. That's point up. So fine. You are seeing that we are now on the first entry, which is our London time zone. Now, on the London time zone, the first entry, we want to see the current candle. This is an uptrend. We want to see the current candle on the 50% line or anywhere below the 50% line. And we want to see our RSI touching the green line or between 0 and 20. So let's continue. So now, between 8 a.m. and 11 a.m., the conditions were not met. We didn't see any condition. Our RSI did not touch the green line, was not between 0 and 20. The current candle also, though the auto Fibonacci retracement was an uptrend, 100% was down and 0% was up. But yet the current candle did not come to the 50% line. So within the first entry, we did not see a setup. So between 11 a.m. to 1 p.m. is our resting time. We don't trade. Between that time, we don't trade. So between this 11 a.m. to 1 p.m., you are not going to trade. So let's watch what is going to happen. So now, we are now at 1 p.m., which is our second entry. Our second entry. Now we are now at 1 p.m. Now let's see if we are going to see a setup. Now the auto Fibonacci is still telling us it's an uptrend because we have 100% at the top and 0% at the bottom. And our RSI is yet to touch the green line. So since this is the case, let's see if we are going to see the setup we are looking for. Now, you see, on the 4 of when it got to 4 a.m. and 4 p.m., yet we did not, our RSI, in as much as our RSI touched the green line, the current candle has refused to come to the 50% line. It has refused to come to the 50% line, meaning there is no valid setup seen. So you don't force a trade here. Until you see that thing you are looking for, you don't need to force it. Until you see what you are looking for, you don't need to force it. So in conclusion, finally, between the first entry and the second entry, we did not see a setup. So we could not pull a trigger. Let's quickly check another coin again, please, to see if we can see a trigger. Can anybody drop any coin randomly on the chat? I can pick that coin and backtest on it. VIX US. Okay, let me search for it if that coin is here. This coin is not on Binance, so this coin that you called for me is not on Binance. We are using Pepe. Okay, let me use Pepe. Okay, I'm on Pepe USDT now. Fine. The first thing you do when you come here, mark the time frame you are in. Is 15 minutes and 1 day. So the first thing, you go to the 1 day, because we are doing backtesting. You go to the 1 day, you click on the 1 day. What you want to see on the 1 day is a bullish candle. So we are backtesting. We are not doing live trade. We are backtesting. You want to see a bullish candle. So let's go back backtesting. Since you want to see a bullish candle on the 1 day, so let's assume we went back to backtest. Let's backtest here. Now, let's assume that this was the current candle for that day. Since we are backtested, this current candle is Friday, 20th December 2024, backtesting. So I will just put a vertical line to demarcate it. So like what I said is, on the 1 day, the only thing you are looking out for is the current candle. Is it a bullish candle or a bearish candle? So if it's a bullish candle, fine, you want to consider entering that trade. Now, since we have identified it's a bullish candle, the next thing you do, you come to the 15 minutes. On the 15 minutes, this is where you are going to make your auto Fibonacci and your RSI to ensure they are speaking the same language. So what I want to do first is to trace the candle. This is the current candle. This was the current candle on that day, Friday 20th, 1 a.m. Now, on the 15 minutes, each candle forms every 15 minutes. So let's assume that that new market that was formed on Friday 20th, 1 a.m., you were sleeping. So 1:15 a.m., you were still sleeping. Down to 7:15, you now woke up 7:15 or 7:45 in the morning. So let's trace 7:45 in the morning. You woke up. Okay, you woke up 7:45 in the morning. So once you woke up 7:45 in the morning, the first thing on that day, the first thing you had to do was you went to your 1 day, checked and confirmed that the current candle on the 1 day was bullish. Then immediately you came to map out. All your entries, the two entry 1 and entry 2, which I said entry 1 is between 8 a.m. So let's mark 8 a.m. 8 a.m. is here. I'll change it to another color. 8 a.m. Then to 11 a.m., which is the first entry. The first entry. 11 a.m. Then the next entry is between 1 p.m. to 4 p.m. So 1 p.m., let's use another color on 1 p.m. to 4 p.m. 4 p.m. Now, so these are the two, entry 1 and entry 2. Now, when you look at this first, my brother, first thing you consider, where is your RSI? Right now, your RSI is touching the green line. Let's see. Is touching the green line and is currently on the 70. It's currently on 17.663, which is between 0 and 20. So meaning the RSI is meeting the condition currently. But there's something you have to consider also, the auto Fibonacci. Is it an uptrend or a downtrend? So auto Fibonacci is telling us 100% at the bottom, 0% at the top, which is an uptrend. Now, for an uptrend, where do we want to see the current candle? We want to see the current candle on the 50% line or anywhere below the 50% line. So if you look at this current candle now, this current candle is below, way below the 50% line, it's on the 100% line. But there's an issue here. The current candle is not yet inside the entry one. So where we want to see that condition is that that current candle must have been inside the entry one, not outside the entry one. Or the current candle must be inside the entry two, not outside our break time. So now, in this case, you can say that the RSI and the auto Fibonacci are speaking the same language. But there is a but there. The current candle is yet to be inside our entry point, which is entry one. So that is the only issue right now. So let's see if when the current candle enters our entry zone, which is 8 a.m. between level 8 a.m., if we are still going to see this same condition we are seeing right now. So now, good. Right now, you are seeing that the current candle as at 8 a.m. on the auto Fibonacci is telling us that it's an uptrend. So the current candle is below the 50% line. But if you look at your RSI has gone away from 0 and 20. It has even gone away from the green line. So this RSI is not making this current candle have a validation. So we have to see that condition that the two must be speaking the same language. So let's continue. So now, if you watch on the auto Fibonacci, it has not changed trend. You are not seeing 0 at the bottom and 100 at the top. Now it is now a downtrend. For a downtrend, where do you want to see the current candle? For a downtrend, you want to see this current candle on the 0% line or anywhere below the 0% line. And your RSI at the same time must be touching the green line. So let's see, now that is a downtrend. You see that the current candle now is now below the 0% line, meaning the auto Fibonacci is giving us what we want, but yet it has to speak the same language with the RSI, meaning the RSI has to touch the green line or must be between 0 and 20. So let's keep going. So at this point, where is our RSI now? Let me extend this, please. Now, looking at this now, our RSI is between 0 and 20. Currently is at where? 12.94. So at this point, you can decide that, you can say that the two conditions are met. Your RSI and your auto Fibonacci are speaking the same language on the entry zone, the London time zone. Now, what is the language you are speaking? Now, you have looked at your RSI. You said you want to see your RSI to be between 0 and 20. Currently, if you look here, your RSI is at 12.94. Then, once you see your RSI, but you have to check on your entry, what is the auto Fibonacci saying? The auto Fibonacci is saying 0% at the bottom, 100% at the top. So what it means is that this is a downtrend. And for a downtrend, what is the condition? That on the entry zone, entry one zone, you want to see the current candle on the 0% line or anywhere below the 0% line. So currently, we are seeing the current candle below the 0% line, and we are seeing an RSI between 0 and 20, which is speaking the same language. So now there's a setup. You can now say that a setup is formed. Now that you have seen a setup, it is time for you to pull your trigger. Now, at this price, this becomes your entry price. The position of the current candle becomes your entry price. This side that is showing you green. Now, this is the current price of the of the candle right now, this current candle. So this becomes your entering price. This is where you enter. Your first entry, on the first entry, that is where you are going to enter. Let me change the color to black. This is your entering point. Now, once you have identified your entering point, the next thing is to take your measurement using your price range. You take your 3%. Don't take more than 3%. 3% is somewhere around here. We have our reason why we say you should not take more than 3%. So use your price range to measure 3%. What's wrong with my mouse? Sorry, guys. My mouse is. From the current price, you measure 3%. Yeah, that's 3%. So you don't take more than 3%. So this becomes your exit point. So this is where you are going to pull the trigger. Now you have your RSI speaking the same language with your auto Fibonacci. Now, what is the language? Your RSI is between 0 and 20. Your auto Fibonacci is telling you that it is a downtrend because you have 0 at the bottom, 100 at the top. And the current candle, for the condition for a downtrend is that you want to see the current candle below the 0% line or anywhere on the 0% line. So right now you are seeing the current candle below the 0% line. At that point, you are seeing the current candle becomes your entry point. That current price becomes your entry price. Then you take profit 3%. Don't take more than 3%. We have our reasons why you shouldn't take more than 3%. So the 3% target becomes your exit point. That is where you are going to come out of the trade. So let's play it. Now, at this point, the condition was met. Let's check the time. Of this current candle. The time of this current candle was 10:15 a.m. in the morning. That was when we saw the setup and we put a trigger. 10:15 a.m. in the morning was when we saw the setup and put the trigger. 10:15 a.m. So let's see when we are going to come out of this trade. So let's see when we are going to come out of this trade. So I'm playing it now. Watch the candle. So now that, let me pause. Now that, look at, now like this is your entry point. Then the market went down further. Now, at this point, the market is going down. It's taking advantage on the drop in price and it's buying for you bit by bit. It's doing what is called dollar cost averaging, using your money to buy across different levels, thereby accumulating more pieces of that coin for you. So that is the margin call we talked about. So now it has bought more margin calls for you, accumulating more quantity of that pepper for you. So right now, it's retracing back up again. Let's continue. Boom. So stop. So now at this point, this is when you were able to come out of the trade. It is at this point you came out of the trade. So you entered at this point. This point 10:15. Then the trade went down, retraced down, bought more margin calls for you, started going up and started selling those margin calls until it got to your final take profit and deliver 3%. So when did you come out of this trade? You came out that same Friday, 20th December, you came out 5:30 p.m. in the evening. So you entered the trade, you saw a setup Friday 20th December, 10:15 a.m., and you came out that same Friday 20th December, 5:30 p.m. in the evening. So that is how to pick a trade using this indicator tactics. So when you come on board, take note, we are going to give you 98 volatile coins and 25 volatile coins. For people who are using free version of the trading view, you are only going to be able to access 25 volatile coins. Which are these 25 volatile coins there? These 25 volatile coins, because you are using free version. But if you are using the paid version of TradingView, you can access multiple coins. So we also have 98 volatile coins we give to you. Outside those coins, because those coins we have proven, those coins are proven to have their own blockchain and they have strong use cases, so they can hardly be delisted by any exchanges. They can hardly be delisted by any exchange, and they have their strong use cases and they have their own blockchain. So once you come on board, you seek for those 25 volatile coins if you are using free TradingView version. But if you are using a paid TradingView version where you can add more than 25 volatile coins, we are also going to give you this 98 volatile coins. Do not trade outside this 98 volatile coins, please. These coins are proven to have their high volatility. They have high volatility, can give you more money, and they are built on blockchain. They have their own blockchain and have strong use cases. It will be difficult for any exchanges to delist it. So I think at this point, we are going to end this section. I believe if there's any question on the chat, I need you to drop the question on the chat, please. So if there's any question on the chat, I need you to drop the question on the chat. Okay, thank you, King Doc Seed. Next time, I believe your network will be more stronger. Okay, he said I should explain the entry point again. Okay. Now, if you can hear me clearly, we don't trade every time here. We have periods we trade. And that period we trade is known as, we call it entry one, and entry two, and entry two. Entry one is known as the London combat area. Entry two is known as the New York combat area. Why is it the London combat area? This is the period people, traders in London, are entering into the market. They enter, they inject billions of dollars into the market. Entry two is period when traders in New York are entering into the market. They inject billions of dollars into the market. And you also want to take advantage to enter the same time they are entering and come out the same time they are coming out with your small money. Now, having known that entry one is between 8 a.m. It happens between 8 a.m. to 11 a.m. Nigerian time. So when you wake up, you prepare for 8 a.m. to 11 a.m. We are going to send you signal from the signal group. And the way we analyze this signal is through this way I've explained now. Entry two is you wait for signal from 1 p.m. to 4 p.m. Let's assume you missed 8 a.m. to 11 a.m. signal. The next signal you are going to wait is 1 p.m. to 4 p.m. signal on the signal group. Now, if you are now good at analyzing. You don't need to depend on signals. You can pick your own trade, analyze your own trade yourself. So we are now saying that let's assume you wake up in the morning. Let me go back to this explanation again. Okay, so listen carefully. Doc, sit, please. So let's assume you woke up Friday 20th by 1 p.m., 1 a.m. You were still sleeping, and you woke up as at 7:45 in the morning. You rush, you came to your system, and you know you have only 2 entries for the day, which is 8 a.m. to 11 a.m. Meaning, if you miss 8 a.m. to 11 a.m., the next trade you are going to wait for again is 1 p.m. to 4 p.m. Now, on this day, you woke up as at 7:45, and you have 15 minutes left to set up your trade. Immediately you came, you map out your 8 a.m. Look at the time, 8 a.m. in the morning. Then this is your first entry, 8 a.m. to 11 a.m. in the morning. You map it out. Your second entry, the next entry you are going to enter is between 1 p.m. to 1 p.m. to 4 p.m. So if you don't see an entry within these two time frames, if you don't see an entry within 8 a.m. to 11 a.m., if you don't see an entry between 1 p.m. to 4 p.m., it means that day you are not going to trade. So that is why we advise, when you are doing this analysis, you do it on 3-4 different points. Like you saw the first one we did not see entry. So if I was depending on only that one coin, it means for that day I'm not going to trade. So you bring out 3-4 coins like this and you map them out like this to find an entry, a perfect setup. So what is the setup? First, you come here, you want to see your RSI between 0 and 20. Currently, looking at it, your RSI is between 0 and 20, which is currently at 3.15. The second thing you want to see, you want to know if it is an uptrend or a downtrend with the auto Fibonacci. The auto Fibonacci is saying this is an uptrend, which is 100% at the bottom, 0% at the top, which is an uptrend. Now, the current candle is what you are interested in. Where is the current candle? We say for an uptrend, we want to see the current candle on the 50% line or anywhere below the 50% line. So currently now, the current candle is way below the 50% line. And the RSI is speaking the same language with the auto Fibonacci. But there is a problem here. What is the problem? That the current candle is yet to enter the entering point we are looking at. So the current candle must be inside that entering point, which is the 8 a.m. to 11 a.m. or the 1 p.m. to the 4 p.m. That is where we want to see. So now we are going to continue. Let's see the movement since I'm doing back testing. Now, the current candle, we are not in the 8 a.m. Now, the current candle is below the 50% line. If you look at it here, the current candle is below the 50% line, this 50% line. And it's an uptrend, 100% at the bottom, 50%, 0% at the top, which is an uptrend. So the condition for an uptrend is that we want to see the current candle on the 50% line, which the auto Fibonacci is saying fine, this condition is met. But we said the auto Fibonacci must speak the same language with the RSI. Now, if this condition for the auto Fibonacci is met, we want to see the RSI between 0 and 20. But right now, the RSI is at 47.82, which means that both of them are not speaking the same language. They must speak the same language. For this reason, we have not seen a setup. So let's continue. The RSI is going on back. Now, if you look at the auto Fibonacci have changed trend. You are now seeing 0% at the bottom and 100% at the top, which is a downtrend. Now, for a downtrend, the condition for a downtrend is we want to see the current candle on the 0% line, 0% line. Now, in as much as we are going to see the current candle at the 0% line, we also want to see our RSI be between 0 and 20. So let's watch what is going to happen. This is happening inside the first entry, 8 a.m. to 11 a.m. So you see, the current candle is now way below the 0% line, but our RSI is yet to touch the green line, which is between 0 and 20. So we are waiting. We are waiting. Now, at this point, you can choose to pick a trigger. Now, your RSI, looking at your RSI, if I trace it here, your RSI is now between, look at it. If I trace it out here, your RSI is at 14.71, which is between 0 and 20. Then your auto Fibonacci is saying that it is a downtrend, 0% at the bottom, 100% at the top. So for a downtrend, you want to see the current candle below the 0% line. So currently, the current candle is below minus 23.6 and minus 38.2% line, which is good for you. So at this point, you can say that the auto Fibonacci and the RSI is speaking the same language. So it means that there is now a setup. Since you are seeing the same language, now that there is a setup, what do? You have to take your entry. How do you take your entry? You come, the current, where the current price is becomes your entry point. So you mark it out, the current price. This is your current price, you mark it out. Then you use your price range. Just take 3%. Don't take more than 3%, take profit. Don't take more than 3% take profit. Let's say 3% is here. So this becomes your exit point. This becomes when you are going to come out of the trade. Now, once you have mapped out your entry point and you have initiated the trade, all you need to do, let's watch. Now, what was the time? What was the time you entered this trade? Was at this current candle. Let's check the time. The time was between 8 a.m. to 11 a.m. What was that time? So that time was 9:45. So you entered as at 9:45. You entered as at 9:45. Look at it, 9:45 was when you entered. So let's see when you are going to come out of the trade. So I'll play. So I'm playing it. You see, it went down. Look at it, went down. It went down. And this down that it was going to, it was buying margin calls for you. It bought margin calls for you. Now, margin call is simply using your money to buy bit by bit across different levels. Now, it retraced down, then started going up. That is how the crypto market moves. At this point, it is going up now. All these levels that it bought for you, it has started selling them and be giving you profits downtrend. Then eventually, wow, eventually it hits your take profits, which was 3% at this point. Was what at this point was when it touched your exit line, 3%. So let's see when you came. You entered as at Friday, 20th December, 9:45. Let's see when you came out of the trade. You came out Friday 6 and Friday by 4:45. That was when you came out of the trade as at 4:45 that same Friday. Also, so that is how to enter the trade at these two different entries. You ensure you see a setup. Once you map your 8 a.m. to 11 a.m. and you map your 1 p.m. to 4 p.m. What you are looking for inside that entry point, you are looking for a setup. And what is the setup? You want your RSI and your auto Fibonacci to be speaking the same language. That is the setup you are looking for. That your RSI must be between 0 and 20. So, and your auto Fibonacci, if it's an uptrend, it should be at the 50, the current candle should be at the 50% line or below. If it's a downtrend, the current candle should be on the 0% line or below. So, no further question. I believe, Toxic, you understood. So the time we could come out is not important. What important is the entry point. So yes, what is more important is the entry point. Remember, we are trading on the spot market, and we want to enter at a perfect time. We want to enter at a perfect time. We are buying cheap, low, so that when the price starts going up, it sells and give us our profits. So we don't expect you to understand everything at a go. Please take note of that. We don't expect you. So please, I understand what you are teaching, but being first time, things are getting confused. Yeah. Honestly, King Kende, I understand you perfectly well. All you need to do is keep showing up consistently, and as you show up, you understand. Then you can also have access to the previous classes on this same topic. Every day we do this every Friday. So we have a recorded version of this section every Friday. So even if you cannot make out time for our live session, always ensure to go through our recorded version. It is that way you are going to understand everything perfectly well. It takes time, please. Thank you for getting value from this section. Thank you, lovely. I need to understand it more. Yes, King Presenter, it is a gradual process. Trust me, you are going to understand. Just keep showing up. So are we to pick trade or Royal QAI will do it for us? Okay, King Ken, just look at your washing machine as Royal Q. Now, your washing machine does not have the ability to go to your room to pick your dirty clothes. Rather, you will be the one to pick your dirty clothes and put that dirty clothes into your washing machine. So that dirty clothes, in this case, signifies this coin that you have analyzed. So you have analyzed the coin, you are going to put it into the Royal Q. Then when you are putting your soap, your Omo, your soap, your detergent rather, your water, those your soap, your water, they are the settings you are giving your Royal Q, the instruction you are giving your Royal Q. As soon as you are done giving the washing machine, you put your soap, you put your water. The next thing, you are going to program your washing machine to start washing for the next 30 minutes, for the next 1 hour, while you go about your activities. The same thing applies here. As soon as you put this coin that you have analyzed, you inject it into the robot, you put your settings. All you need to do, start the robot. The robot will pick up from there While you go and sleep, while you go and do your activities you are doing, the robot will continue based on that command or instruction you have given to it. You don't need to monitor anything after that timeout. All you need to do is expect your profit. The robot will do the rest of the work for you. That is how it works. And it does not take more than 3 minutes to get those settings done. I hope that is clear. So Coach Farah just dropped our YouTube channel. You can kindly go through the YouTube channel. King Presenter, if that is clear, please, Abi. No, King Kende, if that is clear, I need the word clear on the chat, please, from you, if you are still on this call. Okay. Yeah, I'm glad you are happy. I'm glad you're happy. Please, if you got value from this section, I need the word value. So this is why we are telling you that avoid Ponzi scheme. Ponzi scheme will literally not teach you any skill. Ponzi scheme will not teach you any skill. This is a skill you are going to learn for life. We've been here for 4 years using Rqtmi to navigate the crypto market, and we have gotten everything. We have everything that works. All we are saying is for you to just follow simple instruction, and you get results. Skills makes you rich, not theory. Skills makes you rich. So we are here to teach you the skill. This skill, you can impart it in your younger ones, your children, your family, and everybody will experience true financial freedom. So let's stop the get rich quick mindset. Let's focus on the skill. It is the skill that will make you replicate results consistently. I was once like you guys when I started. I didn't know anything, but because of the passion I had in it, I had to follow up. And today now I can present to you. So you also can do the same thing that I'm doing. There's nothing special about it. It's just your passion, your dedication towards what you want. So thank you, everyone. I really appreciate your time staying with us and despite your busy schedule. We do this every Friday, technical analysis for beginners. We have higher classes, please. We have higher classes. We have the SMC classes. It's just like a master class. We have the ANT classes, the PhD class. So as you keep growing your skill, you keep growing your skill, and you keep seeing more, because this is a financial market, and we are trading against the smart money guys, people in the Wall Street, people like BlackRock, Fidelity. These are the guys we are trading against. So you can't afford to just take this thing for granted. I encourage you guys to be up and doing, and definitely you are going to see your desired results. Thank you, everyone, for making it out here. Do have a lovely day ahead of you while I end the section today. Okay, before I go also, we also do futures on Rqtmi also. We also do futures on Rqtmi also. So if you are interested in that also, you can also take advantage on that to make money too as well. But there is a clause to doing future. Spot is more safer, like you all know. Spot is more safer. So anyhow, you reach out to us if you are interested. And those of you who are yet to sign up, you are seeing it. It's pure trading. It's pure skill. You don't need to waste time. Take action of this opportunity and get started right now, because we are at the peak of the bull season. What is going to happen anytime soon is going to be mind-blowing. So take advantage on this opportunity to get started, so you equip yourself with the skills, so that when the market starts pumping so hard and the euphoria is everywhere, you will be able to manage your emotions based on the fact that you know how to do these things yourself. That is my encouragement for you guys today. Okay. You contact King Robin, contact Coach Moore, please. Contact Coach Moore on that. Thank you, everyone. Thank you, everyone. Thank you, everyone. Do have a lovely day ahead of you. Bye-bye from now.